Hi, everyone. Welcome to the lunchtime session for day 4 of Fintech Tour 21. So Fintech Tour is the largest cluster of Fintech events happening in the Middle East. We have had an awesome day 1, day 2, and day 3, some excellent speakers, and it's just only going to get better. Today, for this lunchtime session, thank you very much for sharing your lunch with us, by the way. But today, for this lunchtime session, we have Henry Arsalian, who's going to do a quick roundup of CBDC, central bank digital currencies activity, which is happening around the world. This is actually a sequel to the session which Henry very kindly did with us last year, which was looking at the future of money. So that we'll share a link for that session if you want to watch the recording, but that covers everything around how the future of money's evolved over past, present, and future. It covers things like crypto. This session is about doubling down on CBDCs and focusing on central bank digital currency. So really excited to have Henry with us. Henry is a PwC crypto leader and partner and the former chairman of the Fintech Association of Hong Kong. He's also a professor at the University of Hong Kong, where he's taught the first Fintech University course, and we're doing a lot of work with that course as well. So we're really pleased to have that long-term relationship with Henry and the course. He advises many of the world's leading crypto exchanges, investors, financial institutions, and central banks, regulators, and governments. So Henry definitely knows what's going on in the world around CBDC. So without further ado, I'm going to hand it over to Henry. As ever, we love questions. So please do write any questions you have in the chat box, in the Q&A. This is going to be quite a short sort of session. We're going to have about 20-25 minutes of a presentation, followed by a bit of Q&A. So feel free to add your questions and we'll go through as many as we can. Over to you, Henry.
Excellent. Well, thank you very much, Sagar. I really appreciate it. Bon appetit, everybody. Hope you're enjoying lifetime, and thanks your lunchtime. And thank you for giving me some of your precious time so we can share our passion, not only of crypto and the future of money, but also on what's happening on the exciting worlds of central bank digital currencies. Today, my goal is very, very simple. Is over the next couple of minutes, I want to share with you some of the latest global developments going on in the world of CBDC, and hopefully empower you with this information, and then let you make your own decision on what the impact can be on the future of finance and money. Before I kick it off, Sagar, just make sure you're seeing my one slide properly. Excellent. You're not seeing a split one. Perfect. Okay, excellent. Let me kick it off. I mean, one thing I'll clarify though at the start, and Sagar introduced me as an expert, but let me tell you, whoever tells you they're an expert in crypto, especially in CBDCs, you walk away and you run away. I can tell you, I spent 24/7 of my time in the space. Like Sagar mentioned, I teach at university, I write books about it. And my next book actually is coming out at the end of March. I have over like 70, 80 pages on CBDC. And I can tell you, I swear I have no idea what's going to happen in 1 month from now, because this industry is moving so fast. It's dog years. A week in this space is like 7 weeks in a normal world. So just be careful from that perspective. And there's a lot of developments going on in crypto, right? There's a lot of developments from institutional investors, stable coins, DeFi. Today, I'm just going to focus on central bank digital currencies and really double down, zero down, and share with you what are some of the latest developments that we're seeing on that perspective. Before I start, what is a central bank digital currency? Right? Obviously, we talk about Bitcoin, which is completely decentralized, and there's different types of crypto assets out there. But a central bank digital currency is really a digital form of central bank money that is issued by the central bank. It's kind of digital currency, but the big difference, instead of being issued and decentralized, it's literally issued by the central bank. And that actually becomes part of the monetary base of the country, very similar, for example, to fiat money from that perspective. And this is very, very important because if you look at it today, there's really 2 kinds of central bank money. If you put your economics hat on, first is really banknotes, good old physical cash that we have, which is a liability of the central bank. Second are the reserves that your lovely bank holds at the central bank. The money that you have in your bank account or your favorite payment app or any other financial services provider is not central bank money. It's literally plus and minuses on the accounting books of that bank, where you hope the great firms will come and audit that and make sure it's there and regulators will verify that. But really the money that you have in your bank account is not central bank money. There's really these 2 kinds. And what's really exciting is all of us, everybody today listening to this session, in our lifetime, over the next couple of months and years, we will see the appearance of a 3rd form of central bank money, CBDCs, which is basically like digital physical banknote, but actually that instead of putting in your physical wallet, you're going to put in your digital wallet. And that's super, super exciting. I can tell you in the history of money, this is one of the big developments we're seeing right now, and that's super exciting. This would have never have happened not but for Bitcoin happening to 13 years ago or 2-3 years ago, with actually stable coins, with Libra being announced. And we'll talk about all this later today. But what's also very important is that this CBDC discussion today, there's really increased discussion on this topic around the world. I mean, case in point today, there's about 86% of central banks are doing research on this topic, including actually some in Saudi Arabia, which has been doing great work with Project LIBRA. I'll talk about that later. But there's obviously a lot of activity going on around the world, not only in the region, but also around the world from that perspective. And I think it's also important that we just clarify one thing before I zero in on when it comes to CBDCs, is really what are stable coins, because often there's a lot of confusion from that perspective. Stable coins have been an asset now that has been experiencing tremendous growth. What is a stable coin? It's literally a stable coin is a digital currency that, if it's Bitcoin, it's pure, the price is determined by offer and demand. It's very decentralized. What is a stable coin? It's a digital currency that is backed 1-to-1 by fiat money. That means every one of these digital currencies, if it's $1 fiat money, it's backed by $1 fiat money. Sorry, I'm in Hong Kong right now. I'm using Hong Kong dollars, but it's the same principle from that perspective. And there's a lot of type of actually stable coins in the market. Many of them are obviously US dollar based, tons of them in the US that are regulated, many of them that are also non-regulated, like Tether, which is by far the biggest one right now, anywhere from 50 to 70% of total market cap of stable coins are unregulated with Tether. But also what's becoming very, very interesting is we're having a lot of decentralized ones. And keep this in mind, at the end of the day, at the end of my presentation, I'll talk about METAVERSE 3.0. We're having a lot of decentralized stable coins where literally it's kind of it's mathematical code at determining the value of a lot of these assets. And that's very, very interesting when it comes to the future of money. But really the value of you're seeing stable coins really is booming right now. We're about to cross $150 billion in stable coins. And that's tremendous. I mean, to put things in perspective, in January 1, 2020, actually, I was in Saudi around then, and literally we had less than $5 billion in assets. And now we're over 100 billion, or crossing almost $150 billion in assets, which is absolutely incredible. And there's a lot of benefits there. Stable coins, for example, if you're pegged to fiat currencies. So, there's no, if I send Sagar tomorrow a Bitcoin, he'll be very happy. But the problem is we don't know what the price of that Bitcoin will be a week, a month, a year from now. With a stable coin, he knows exactly what the value will be a week, a month, a year from now, 10 years from now, because it's backed by fiat currency. You're exposed to the underlying fiat currency changes, but at least from that perspective, it's stable. There's also no cross-border fees. If I'm sending money, for example, from Hong Kong, where I'm now, to, let's say, my family in Canada, there's obviously, if I do it via the bank with the very lovely Swift system, Swift network, not only, frankly, the user experience is absolutely terrible with many of the banks, but there's also a lot of explicit fees, hidden fees, and obviously a lot of complications. For example, it doesn't work on the weekend. For reasons that I also always astonishes me. There's a lot of these actually problems we have. Whereas with stable coins, I can send money around the world instantaneously, 24/7, pretty much for free. And that's obviously very interesting, especially when it comes to remittances. For example, today the average fee of remittance is around 7%, and we're talking over $500 billion that are being sent around the world. And again, remember when I talk about the history of money, this is again when Libra got announced in June 2019. Actually, ironically, today, the head, as we're recording this, the head of that launches, David Marcus from Facebook, and now Meta, just resigned as well. So obviously the goal, what they were trying to do at the time, is to make sending money around the world as easy and seamless as sending a WhatsApp payment, for example. So all this is happening. A lot of tech players are coming in. But again, I really want to make sure we cover stable coins, and we show now the difference with central bank digital currency. A stable coin that I just mentioned, again, it's digital currency backed by fiat money. When it comes to CBDCs, this is again a digital currency that is issued by the central bank and that becomes part of the monetary base of the country. And that is obviously very, very big deal. And this actually, credit goes to a lot of central banks, because if you're a central banker today and you love Bitcoin, I mean, you're crazy. This is a bit like a taxi driver being excited to see Uber or Grab or Careem come in their market. And of course, central bankers were way smarter than that. They said, you know what, maybe we don't like Bitcoin, but there's a lot of the features of Bitcoin that we love and that we're able to integrate, and that's what happened. But what are the features that central banks love? And that's where it becomes very, very interesting. One of them gives better visibility of the impact of monetary policy. COVID is a great example. Imagine today, as a government, let's say you're trying to give money to people, you're trying to encourage the economy. Let's use an example outside of the region. Let's use the US, for example, where everybody got $1,200 from the government. The problem is you have no idea as a government where people are spending the money. You cannot even force them to spend the money. And if they're doing, you don't know where they're spending the money. Because the reason being, obviously, if you're doing cash payments or any other payment system, it's very difficult to get accurate data live of where people are spending the money. The beauty of a CBDC economy is basically, as a policymaker, you can see live on the spot the exact economic activity in your country. I can know, for example, in Riyadh, how much money are people spending, for example, in buying, ties, for example, or shirts, or in restaurants. Everything is very, very clear. You can really narrow it down and get live data. Today, in many emerging markets, as you know, we get data maybe 3 or 6 months later. Frankly, a lot of these estimates, and in many cases, I mean, the fact that we put a decimal shows that we have a great sense of humor. But the good thing is actually when it comes to this, it really, from a policy-making perspective, gives you a lot of visibility. We'll talk about the downside of that in a minute, but I think that's one of the big positives. Second is really curtailing the Black economy and tax evasion. Again, on this perspective, one thing you see in many countries, like Europe is a very good example. Countries like Greece, Italy, 20 to 30% of their payments often happen in cash. Why? Not because the Italians or Greeks suddenly love paper money, because obviously they can avoid tax on it. I know that's not a big concern for many parts of our region, but I think that becomes obviously with this, actually tax evasion becomes very much impossible, because tax can be even paid immediately whenever a transaction is being done. Money laundering, a very, very big problem. I mean, today, just to put things in perspective, according to the UN, between 2 to 5% of global GDP is being laundered every year. That's $800 billion to $2 trillion a year. And frankly, and all the stuff that we do with banks, with KYC, AML, all these beautiful questions that banks ask you, does not work. The reality is we're able to capture less than 1 to 2% of laundered transactions, which is obviously, frankly, a massive failure. But the reality is there's no other option we have right now. We have the limitations of the current system. The beauty of a CBDC economy, for the first time, we have a very good fighting chance against money laundering. If, let's say if I want to corrupt Sagar with money, that actually becomes pretty much impossible with CBDC, because it'll be traceable on the spot. Yes, corruption will probably always exist, and there's different ways of, people getting gifts to each other, favors, promotion, jobs, and stuff like that. But at least corruption with money, it will be a thing of the past if we move to a CBDC economy. The other thing, by the way, is actually embedding monetary policy in the CBDC. For a good example, this is what's happening in Europe. Many countries in Europe, they have negative interest rates. The thing is, if you're keeping your money in cash, for example, there's no way a central bank can impose negative interest rates, for example, and encourage you to use that money and invest in the economy. The good thing for policymakers is that with the situation of a CBDC, they could they could do what we call, we can make money programmable. That means we can embed negative interest rates. So if you're not using it, you're losing part of it. But also they can make you actually give money that is programmable, in the sense that if tomorrow morning, let's say what happened in the United States, I'm giving everybody $1,200. If they don't spend it in 2 weeks, poof, it goes away. These really allows you a lot of capabilities that you don't have today with traditional money. That obviously makes it very, very interesting for policymakers as well. And the other reason, by the way, it's an alternative existing payment system. We don't know what happened to the payment system. Normally now they're very robust. Our TGS systems, they're actually very, very robust. But like in many cases, for a lot of policymakers, this allows kind of an alternative that can be used in parallel, but also in many cases as a backup as well, in case something happens as well. So very interesting what's happening there on that perspective, on that going. Now, I think it's important to understand there's really two kinds of CBDC. There's wholesale, between the central bank and the member banks, and there's retail CBDC, which is between the central bank and us, all of us, the public. So it's basically wholesale CBDC is digital currency issued by the central bank and basically the banks. As a public, you don't really see it. Right. So Project Aber is a very good example. It's really between central banks. As a retail public, you don't interact. You will benefit from the benefits of that, but you're not going to be interacting with that on a daily basis. Whereas retail CBDC is literally like banknotes, but in digital format from that perspective. I think it's very important to understand there's a lot of consequences of some of these benefits. When I was talking here about some of the benefits we see, this is great for policymakers, but you can see for the public, there's a lot of considerations. One of them, for example, is privacy. If I want to avoid money laundering and tax evasion, it's great from a policymaking perspective. But then literally, if the governments and authorities can see every single of my transactions, that may cause certain issues. And that obviously is, we'll talk about China at the end as well. That obviously brings up a lot of issues that people need to care about. And let's talk about wholesale CBDC, which I think that's the easiest one, or probably the less impactful on that perspective. So wholesale CBDCs are really, again, between the central bank and the member banks. And there's been a lot of experimentation in this area. For example, this really started around 2016, 15, 16, where there was some of the first academic papers and some of the first experimentation on the side that was starting. Many of them, for example, were focused at the national level. So we're like, okay, can we use a central bank digital currency within a country and experiment with it? The reality, actually, what happens is, to be very practical, is that within a country, payment systems may not be perfect, but they work okay. And as you guys know, if something works okay, there's no real need to change it. But at least it showed that these experiments work, and we're able to actually operate from that perspective. And then we move on to a different model, which is, happened about 2-3 years ago, which is what I like to call the cross-border model. These are my personal categorization. There's no official rule of these. These are what I use in my book. And again, but I think that's a good way to simplifying them, grouping them together. And what was happening in the cross-border model is we're having really CBDC experimentation between central banks. Actually, what was happening in Saudi is a good example, between Saudi and the UAE with Project LIBRA, where it was really kind of showing how we can actually use CBDCs from that perspective. And there were many others that were coming on. One a good example is actually what was happening between Hong Kong and Thailand, where what happens in this model was a central bank, if you wanted to go and use a CBDC corridor, you literally go, deposit your fiat money. You would get in exchange a digital wholesale CBDC, like kind of token equivalent, that you're able to use within a corridor of other banks of another country. So imagine, again, you're giving to the bank, your central bank, you're giving them the fiat money, you're getting the digital currency, and this allows you to actually correspond with other banks in the other country. The biggest benefit here actually allows you to bypass the whole correspondent banking network, which is completely, frankly, an outdated system that we have, and that's actually what causes a lot of delays within international payments, because as operating hours are there's a lot of fees in the system, there's less and less banks getting involved in cross-border payments, correspondent banking networks. So I think that's one of the big differences, one of the big things they try to tackle. For example, here, if you can be the smallest bank in your country, and you could send money directly by this corridor model to the smallest bank of the other country without passing by the big correspondent banks in the middle, which obviously empowers and it creates more openness, and it's better from that perspective. But again, this is great, but it does not completely reinvent the wheel, and it's not very scalable. As I think about it, the problem with this model is that, again, you need every country, every central bank to correspond together, which is obviously quite complicated. This is what a third model came in, which is the multi-CBDC cross-border model. The latest one is called mBridge, for example. That basically what they try to do is you try to build a platform where central banks can come on it, build what they want, and be able to actually interact with each other. And this is where probably the industry is going to go. And I think if I was a betting man, in the next couple of years, this is the kind of model that will be used by central banks, where there's a common platform, people agree on it, and we're able to come up and actually build our CBDCs on it. And there's been a couple of models that have been experimented in recent months. For example, initially, the big discussion was, okay, should we just have these models that are compatible? Where everybody builds their own CBDC, and we say, okay, guys, are we going to make sure we have the same standards from that perspective? The reality, this is very good from an academic perspective. It's good for the nerds like myself. When we talk between other nerds in crypto, we talk about this model. The reality does not work because there's not much improvement on the current system that we have today. And as you all know, anybody who has been involved in international standard setting, it takes honestly 10, 15, 20 years to have a standards that everybody agrees on. I mean, even on basic stuff like climate change, we're not able to agree around the world. So imagine on standards for CBDC. So I think that's one of the reasons this model is not very practical. The second model here, again, I'm using the classification of the BIS, the Bank for International Settlements, was really the compatible CBDC model. I like to call the connecting the pipe model. It's very simple, but I think it gets to the point. It's basically what you try to do in this model is you kind of literally pipe up every central bank with each other to try to see if it can work from that perspective. The problem with this, it doesn't work for very practical reasons. If we take the world's 200 central banks together, that means we need more than 20,000 piping between each one of them to operate. This is not scalable. Frankly, we're better off staying in the current system that we have with SWIFT. It's better than this. But again, I think it's a model that was actually worth considering as we go through a project. And Project Stella in Europe, Jasper Ubin, for example, have explored this, but it did not work for obvious reasons. Now, the third model, which is one probably that will be used, and this is the one that's getting traction right now, is the one, there's a single infrastructure and ledger, or kind of a platform that is built that is often called a multi-CBDC, where you let the various banks to bill on it, each one with their level of transparency and security they want, but at least you have it there. It's a bit like kind of a Apple Store, where the conditions are met, everybody can build their app on it. It's the same platform, and there's a bit of interoperability from that perspective. This again raises a number of questions on how it's being governed, the risk management, and so on and so forth, but at least it's a model that is scalable. And this is the model, for example, right now that is being used by Hong Kong, China, Thailand, and the UAE, for example, in their mBridge, but also the one with Singapore as well. This is actually the model that is being used by Singapore, and you can see how it works. You can see on the right side here, there's a common platform, and central banks, different central banks come in, can build the way they want it, and you can actually, but at least there's something that is interoperable, and everybody can correspond together. And I think that's very, very exciting, because it really allows us to innovate from that perspective. I was mentioning to you, 86% of central banks are looking at this topic. There's obviously quite a few of them. What we do at PwC now, every year we actually release a ranking of it as well. So you can see some of the models that are being implemented on there, but there's a lot of activity in the space from that perspective. Now let's talk about the second one, which is probably the most impactful from that perspective, is the retail CBDC element. Again, when we talk about retail, it's important to understand there's two kinds of retail CBDC. One of them is obviously what we call token-based, and there's account-based. What is token-based? Is literally like physical. Right now, if you think about the money that we have, it's token-based that you can hold with your hand. It works offline. You can put in your pocket and you can use. But there's also account-based, which is you have it in a bank account or somewhere that you need actually some online access to be able to use it. There's been a lot of debates of what is a type of retail CBDC that will be used. You know, many people, for example, have said it needs to be account-based, because then we can do KYC, we see everything. But the problem there, it does not work offline. So as you know, certain parts of the world, regions, you need to put it offline. And also, if you're trying to do financial inclusion, you need a way that everyday people can access it. For example, a lot of people, even people in my family, they don't know how to even use a smartphone. You know, if you're elderly and so on and so forth. Whereas actually, if you have the benefit of that's a problem with account-based. If money only exists in a digital format, you're excluding automatically a portion of the population. Now, the beauty with token-based is obviously it works offline. But however, the problem is if you're letting transactions happen offline, there's always a risk of money laundering, because how do I know if I'm sending money to Sagar peer-to-peer? How do I know that I'm not a terrorist, for example? My money is a laundered money, for example. Some of these things have become obviously very, very relevant. What becomes exciting is when you look at the different models of a retail CBDC that haven't come into play. And there's obviously, this is again, the categorization. There's not a scientific way. This is the one I like to use. This is what this is from my book, actually, but I really to show how we should look at these different models of CBDC. The first one is what we call the decentralized model, which is very rare. Actually, the only one doing this is the Marshall Islands, where the central bank comes and literally issues a decentralized currency. That means the central bank says we're giving away control of our money. It's out there. In the case of the Marshall Islands, it's a currency where actually there's a fixed inflation rate of 4%. It's there, but again, this is not very practical. No central bank will give away control of their money. And the Marshall Islands is a very small country. There's no central bank. I mean, it's an island. It's a very, very different situation from other, that's from Saudi, for example, other countries in the region as well. But I think it's important to understand this is a model that is being explored, and it's very, very interesting, at least academically or intellectually, that a country is actually looking at a decentralized model from that perspective. Second example is what we call the synthetic CBDC. The synthetic CBDC was actually kind of brought forward by the IMF, actually, by the International Monetary Fund, where the idea here is very simple. Is you say, well, today there's the banks in the system, and the banks operate on a fractional banking model. When a bank has, let's say, $100 in their account, they need to keep, let's say, 15 in the reserve, and the remainder, they can use it to do other lending and other activities they want to do, get involved in. That's how money gets created. That's what we call fractional banking. A synthetic CBDC is very different, where the model says, you're able to open an entity, let's say a tech firm, let's say Fintech Henry company, I'm able to open an account with a central bank, and every time that for each digital currency that I'm issuing, I need to back it for $1. So $1 of digital currency needs to be backed 1-to-1. I'm not allowed to do lending. I'm not allowed to do anything else. The only way I can make money is by basic transaction fees, for example. This is a model that has been explored for a very long time. They call this narrow banking in the US. People have been trying this, but this is a model that is very unlikely, because obviously it doesn't create the money creation, but also this is not a real CBDC. Because technically you have a private company that is in the middle that is issuing it. Yes, it's backed 1-to-1, but I think it's important to at least put it here that this is one of the models that has been explored, especially by the IMF from that perspective. The other one, obviously, there's been a couple other models that have been explored, but there's two of them that I want to cover. One of them is what we call the two-tiered approach, which is basically where you have the central bank that obviously has kind of a platform, but again, people are using it via the banks. You're using the banks, the central bank money is distributed, the retail CBDC via the banks. The big difference here is that the central bank only sees wholesale payments. Very similar to today, by the way. They only see wholesale payments. They don't see the details of the retail transactions. So if I send to Sagar again, let's say $10 for conversation's sake, the central bank does not see that. It only sees the money flow between the different member banks. And the last model is the one where the central bank actually sees the retail transactions. And this is the one that is being approached right now by the Bahamas, Cambodia, China, and others, where you're trying to look at the model where, as a central bank, I have visibility on the retail transactions. So if I want to have all the goals that I mentioned before, I want to see monetary visibility, I want to know where people are spending the money, I want to combat money laundering, corruption. This is often the best way because you have access to everything and you see it. Also, it kind of reduces the counterparty risk. The argument for a lot of central banks is, well, if I have all the data, I have a copy of the entire ledger of all transactions. If a bank goes bust, doesn't matter because I have all the transactions. I have access to all the data. So the argument there is, yes, you may be sacrificing your privacy because government and central banks is everything. But on the other hand, it may reduce systemic risk because the central bank has so much visibility on that perspective. We can debate this all day, the pros and cons. My job today is I want to share with you what is happening, what the different options are available in the market. And here there's been numerous initiatives as well on retail CBDC. The Bahamas is live. Nigeria went live as well a couple of weeks ago. And of course, the big country to watch here is what's happening in China. For those of you that are here on my last presentation that I made a couple of months ago, I was telling about China. And China, I told you watch China because a lot of things were happening. And of course, it happened. China has a lot of developments. China is without any doubt years ahead of many other countries when it comes to CBDC, retail CBDC, with what it calls the e-CNY. Basically, China has made it very clear now they're not going to ban physical cash, and you'll still have some privacy for small payments. But actually now they're moving forward with this digital currency. People and the retail and the corporates can have wallets, and also initially it's only for China. Although they made very clear to specify that technically nothing stops from a technological perspective for this currency to be used around the world. You can think about One Belt, One Road, for example, and other initiatives where this could come in very handy, and where many countries were probably very happy to actually deal with this e-CNY rather than US dollars, for example. Chinese have been looking at this for a very long time. They've been researching the topic since 2014, set up an institute in 2016, and testing it since 2017. I mean, to put things in perspective, the Bank of England launched its first consultation on the topic in March 2020. So they've been way ahead of everybody. There's been tested, there's been pilots going on. And again, it's been very clear that it's going to be one-to-one. So one renminbi of this digital currency is equivalent to one renminbi of physical money from that perspective. So it's part of what economics we call the M0, which is kind of the cash in circulation, if you want. They did a lot of things. For example, they had lotteries, for example, they give people experimented with. But just to show you a bit of the data, so far, as of July 1st, there was over $9.7 billion that has been tested with. Over 1.5 million merchants, and there's over 140 million people that already have a wallet. This is a test. This is the pilots, by the way. So to show you how this is really moving fast, the Olympics start in China on February 4 to 2022. Many believe this is a good way to test it. And as you guys know, in the media, China has been basically banning Bitcoin mining, and Bitcoin cryptocurrencies are completely legal in China. Kind of paves the way to have this kind of e-CNY from that perspective, where there's control, there's oversight, unlike the Bitcoin, which is obviously completely decentralized from that perspective. And it's also very important to understand that all this is not happening in silo. All these CBDC developments are happening at the same time with other developments that happen. And that's super exciting. For example, the entry of institutional players. As banks are seeing, financial institutions are seeing that central banks are doing this, this catalyzes a lot of central banks to come and be more active, banks to get more active in it. Normally, a lot of banks traditionally would say, we don't want to get involved in crypto because we don't know what the central bank would say. But here, when you're seeing your central banks experiment in it, it really catalyzes a lot of developments in that space. Second is really what's happening in other verticals like NFTs. So think about all the developments going on right now with non-fungible tokens. Again, what is the NFT? It's for the first time, we can mathematically prove that a certain asset is very unique. This obviously has been absolutely booming. Again, it's not the topic of this presentation, but the question is, as we're having these old assets, digital assets being developed around the world, what is going to be the interaction of CBDCs with them? What's going to happen? So very interesting, but it's why this is going to be most interesting to watch is what's happening with the developments going on right now with Web 3.0 and the metaverse. If you think about it, CBDC is very centralized, very controlled. Central bank runs it. What's happening now, Web 3.0 metaverse is the exact opposite. You could not be more polarized than what these two developments. First of all, what is Web 3.0? This topic we often talk about. If you think about the internet, we had Web 1.0, which is the online internet static. That's how I discovered the internet first back when I was younger. It was very kind of a book. You went, you looked online, and that's it. You got some information. Then we moved to what we are right now, which is Web 2.0, where it's more dynamic. There's tech platforms, but however, it's controlled by the large technology platforms. For example, myself, I think many of you follow me on social media. Let's say on LinkedIn, I have 500,000 followers. Tomorrow morning, LinkedIn doesn't like what I do. They say, Henry, you did a bad job on Fintech Tour and on your Fintech Saudi presentation. We're kicking you out of the platform. Nothing I can do. For the last 5 years, every day I've been creating content that is stored on LinkedIn, and I lose it immediately. On YouTube, for example, I have numerous YouTube channels. I have channels in French, Arabic, and Spanish, in Chinese, but it's in my Arabic channel that I have on YouTube. If tomorrow morning YouTube doesn't like my content, they can kick me out like that immediately. So again, it's controlled by these large players. By the way, they have access to our data and all the challenges you see here in the media as well. And we're moving to an era that is Web 3.0, which is immersive and is decentralized. It's me as a user, as a content creator, when I'm creating content, I'm getting compensated for my content. And you as a consumer, for example, you can get paid for the videos you're watching, for example. So as we're moving to this whole decentralized world that is really open, trustless, and permissionless, and this is happening, by the way, it's happening quicker than many expected it. What is going to be the role of CBDCs in here? It was exactly very centralized, as everything's transparent. How does that interact with a whole universe that is becoming decentralized? And especially if you think about other areas that we're pushing into right now, one of them is the metaverse. Obviously, what is a metaverse? Is kind of a 3D universe, immersive environment where users can interact with others via their avatars, and again, in a decentralized and open ecosystem. What that means is, like, if during the day I'm gonna be a boring crypto guy who wears a tie and a white shirt, but at night I like to have long hair and I'm a musician, for example, in this 3D universe. As my avatars, I wear a cool jeans and a cool t-shirt. So you have all universes that are being created, but you cannot stop that. And this obviously became at the forefront when Facebook, that we all know, love or hate, became Meta. And it's important to understand this open ecosystems have existed for some time. Many of them were platforms that were very centralized, were controlled by companies. It's like many of you are gamers, I'm sure you operate into the gaming ecosystems and you have assets in that game, for example. But now that a lot of these are becoming decentralized. Decentraland is a very good example, or Sandbox is a very good example, just went live actually yesterday. Just to put things in perspective, only on Sandbox right now, there's over $500 million of real estate. And nobody can stop you. You come in and you're able to actually operate in this metaverse ecosystems. So it's important to understand, as we're moving about CBDCs, are we talking about the future? It's very exciting. What is going to be the interaction with some of these developments going on, especially if you think about some of the elements here on, for example, privacy, interaction, and so on and so forth. One thing that's important to understand is CBDCs are here to stay. CBDCs will come into the market for sure. And the question is not a question of if, it's a question of when. When exactly that's going to happen, again, it comes back to what I mentioned at the beginning of the presentation, is I have no idea that's what's going to happen even a month from now in crypto from that perspective. But it was a pleasure sharing with you all today. If you like, by the way, CBDCs, I have a lot of content on the internet. On my YouTube page, for example, I have a lot of explainer videos on what is a CBDC. I give examples. All my content, by the way, now is also available in Arabic as well, on my Arabic channels as well, on YouTube as well. And you can follow me on Twitter, for example. On Twitter, I post daily content on topics like these, on CBDCs and crypto, and of course on other channels like LinkedIn and others as well. So I'll stop it here, and hopefully this was insightful. Let me stop it here.
Oh, Henry, it was awesome. It was really, I really enjoyed that. There was so much content, so much rich content. And I think it was just covering so much in a short space of time. So really appreciated the insights. Thank you very much, Henry, for all your insights around CBDC, Metaverse, Web 3.0, and everything as well. Just a reminder that this session is recorded. So if you did miss anything or you want to go back and look at any of the concepts which Henry talked about, you're more than welcome to, and that will be available on the YouTube channel. As Henry mentioned, you're more than welcome to follow him, follow his YouTube channel, and even see some of the work which he's doing in Arabic. Henry, I appreciate we're short of time, but I just have a few questions that we've been asked. So one question which we've been asked several times is you've got sort of our fiat currency, right, which is now pretty much digital. Most people now paying cashless, they're paying in digital currency. You've then got the stable coins, which you mentioned as well, and now you've got CBDCs. How much value does CBDCs add over the fact that you've got the currency, which is now basically digital? It can be it can have low transaction fees. It can be moved across really quickly. So what additional value does CBDCs provide more so than what we've got already?
With stablecoins, yeah, absolutely. I think it's a very important question because, like you mentioned, with stablecoins, let's think about dollar, for example. I can have a digital version of a dollar, let's say USDC, USDT, or UST, whatever I want, and I could send that dollars around the world right now very seamlessly, pretty much very easily. The big difference is, again, that is issued by a private company. Yes, it's regulated, but there's a private company that has taken that dollar and that has issued as digital currency in exchange. And that is very, very different and they can block you, they can do whatever they want. It's very different from having a digital form of central bank money. Imagine when I have this banknote, for example, in my hand, it's mine. Like nobody can take away from me. And that is actually very different from that perspective with having a stable coin as CBDC and also that you have a lot more features that a central bank can use when it comes to a CBDC because of the whole, it's issued by the central bank. So the big question would be when CBDCs are issued, what's going to happen to stable coins? Because if you think about it, both are worth $1. Do you rather hold something that is issued by the central bank? Or do you rather hold something that is issued by a private company? For sure, I'd rather hold something that is issued by a central bank because the risk is lower. There's no counterparty risk from that perspective. So it's going to be very interesting. When it comes to CBDCs with cryptocurrencies like Bitcoin, for example, those will go from hand in hand. They both help. It's a bit like people have gold today and cash. It's the same thing. It's the two different assets, different structure. Bitcoin, for example, there's only 21 million Bitcoin. That's it, not more. You cannot create more Bitcoin. Its supply is fixed. So in that role, it's very similar to gold, for example, that actually have a big role from that perspective, whereas CBDC, it's part of the monetary base of the country. Today, for example, now around the world, we're going to record levels of quantitative easing, which is government literally printing money. You could easily do that, probably more easily even with a CBDC, but nobody can print more Bitcoin, for example. So again, CBDC is very issued by the central bank. Stable coins, again, they're centralized. They're issued by a private company if you want. But again, in some of them, there's no you can use them and you can do whatever you want with it. And obviously then you have cryptocurrencies like Bitcoin that are fully decentralized.
And if we take a step back and say the fiat currency we have, which is now everyone's using in a digital format, so your online payments, online banking, how will CBDCs work with that? Is it because essentially isn't that like having your CBDCs because you've got a digital format of your fiat currency now anyway, which you're using and transacting with?
Yeah, excellent question. I think what's important to understand is when we talk about digital forms of money today, let's say if I go my PayPal or any other app that I love, yes, you could say my money is digital. Why do I even need this thing? I'm able to use digital money. When I send money to friends and family, it's completely digital. Yes, but that money is actually, it's not central bank money. It's money that is actually on the app, if you want. It's within the ecosystem of the app, and you're really exposed to the risk of a payment processor, for example. You literally, if that money that you have in your bank account or your favorite digital payment app that you're using that is digital, yes. But again, it's literally accounting entries on the book of that app or payment company, whatever. In the event something happens to that app, money's gone. Or yes, there's often insurance, there's a certain amounts and this and that, but it's not conceptually. Whereas in the case of a CBDC, it is issued by the central bank. It's part of the monetary base of the country. And that obviously has a big impact because obviously it has a different, it's a central bank money that obviously is way more interesting from a practical perspective as well.
No, noted. No, that makes a lot of sense. And I guess just talking a little bit more about the technology being used by CBDCs. So CBDCs, I work on blockchain technology. is the technology being developed by the central banks? Are they going and they've got like a team of tech geeks which are developing the sort of the blockchain? Are they using third parties? If they're using third parties, is there a risk there that they actually you're creating more risks by introducing a third party in a very prominent position for CBDCs?
Yeah, good point. So the reality is, you wonder first. There's two questions here. One of those, who is building this? Are the central banks, as we all know? Then, and no disrespect to any central banks, but they're not the most tech savvy organizations normally. It's normally staffed by economists, and maybe the only tech function is the IT guy who comes to fix the computer, for example, right? Of course, this is now changing because you need to bring this whole innovative mindset within the central bank, and that's very difficult culturally because obviously a central bank, financial stability is the most important thing you have out there, right? And so that it's obviously very interesting how this shift is going to happen. I have to say, central banks have done a remarkable job. I never cease to be amazed about how fast central banks have innovated, adapted in the rise of CBDCs. I mean, I was mentioning before, 86%. This is data from a couple of months ago. It's definitely higher now. Are looking at CBDCs. So very, very interesting from that perspective. All the experimentation that's taking place so far, some of them have taken on private blockchains. Many of them are taking on blockchains that may be on a private network, but are public blockchains that we know. For example, let's look at the Wholesale CBDC. The latest one took place, for example, on Ethereum. The one before was actually on Corda, which is by R3. And so every one of these blockchains, some of the European ones, for example, took place on Tezos. The Marshall Islands, for example, took place on Stellar. So there's a lot of actually blockchains that are taking place, and there's the people are experimenting with different ones. When it comes to different blockchains right now, we're probably going to live in the era of multi-chain. There'll be different blockchains for different things. Some of them that are more, maybe slower, but a bit more secure. Others that have better scalability and maybe are able to move faster. So I think there's different horses for courses, like we say, when it comes to different tech platforms that are being used.
Oh, great. I love that term multi-chain. I think that's something which we'll probably hear more and more of as we see more of these different sort of structures being developed. Just bringing it to Sama and what Sama has been doing around Project Aber. Where do you see the future of sort of CBDCs in Saudi, in the region, particularly being a dollar sort of base pegged currencies? How does that affecting, and being sort of very oil driven sort of currency, how does that affect the CBDCs?
I think for many of you who know, I mean, obviously, I'm very, very bullish on the potential of Saudi when it comes to fintech and also on digital assets more broadly as well. I think there's a couple of big advantages that let's say CBDCs can provide, right? One of them is purely, I mean, as Project Aber does, which is maybe on the cross-border side, right? But if we think about, for example, every time there's cross-border payments, the fees, especially within the region, let's forget even Saudi, the whole region, for example, right now, the fees are still very, very high. If you think about people are sending money from, from Saudi to Dubai or to other place, or people sending money from, let's say, Dubai to Pakistan to India and so on and so forth. There's tremendous fees in the system. And unfortunately, it's often the people who can afford it the least who are paying the highest fees. And that's obviously one of the reality where I think hopefully with CBDCs, and probably frankly with stable coins as well, and crypto more generally, we're able to tackle it. Now, where it becomes interesting is, yes, CBDCs are very important, but I think in order to have a flourishing CBDC ecosystem, and this may sound ironic, you also need a very good digital assets or crypto ecosystem. And this is something we've seen in many countries, where, because one brings the other, for example. Both will interact together, by the way. Both we're talking before, we'll multi-chain ecosystem. We'll have like CBDC and digital currencies will interact with each other. And because one drives a lot of innovation, a lot of possibilities, and that actually are kind of by osmosis, the CBDCs can benefit from it. A very good example is CBDCs would not exist but for Bitcoin being invented. But for the push of stable coins, they would not have so much activity right now when it comes to CBDCs. You can very clearly see the graph following the announcement of LIBRA. Back in June 2019, the activity of central banks skyrocketed because of that. From that perspective, it has a very, very big impact on it. So I remain very optimistic in the future of crypto in the Middle East. I remain very optimistic on the potential of not only digital assets and CBDCs, but also actually fintech within the kingdom as well. And I believe we're at the historical moment right now in the history of money. Make no mistake, what we went through COVID right now in many parts of the world, we're still going through COVID, is a historic moment. Our kids, our grandchildren will look back at this period. Well, we thought, it's not COVID, we're stuck at home, this and that. But it is a historic moment where there's been massive shifts in the history of money. For example, what's happening right now with cryptocurrencies? I really believe, but for COVID, that people are having time at home to look at this, and second, but for the whole quantitative easing that we saw, the record levels of money printed around the world, we would not see the rise we're seeing right now in cryptocurrencies. It really catalyzed it by 5, 7, 10 years on that perspective. And this is what's exciting here. What I find the most fascinating is it puts pretty much every country at the same level playing field. In the same way we had the internet 20 years ago, in that case, the Americans came and became dominant in the space, and they actually kind of came to dominate the internet, if you want. The big tech companies most of them are there. When it comes to the future of money, what's really exciting now is that pretty much every country is the same level. And we've seen small countries really take an edge on this, become leaders. Countries like Bahamas, for example, countries like Bermuda. You have countries in Europe like Gibraltar or Malta, for example. You have to really use this as an opportunity, new technology to come and develop on it. And that's super fascinating, especially that a lot of these developments are happening. This is a lot of centralized world. There's so much developments going on right now when it comes to decentralized economies. What's happening in decentralized finance, we don't have the time to talk about this, is very, very exciting. But people are now able to get financial services with no intermediaries. So really, I think this is a historical moment in the history of money, in the history of finance. There will be winners and there will be losers, but at least everybody is starting on the same starting point, which I think is very fair and very exciting to watch.
And just following on your point about DeFi and sort of impact on finance, what CBDCs in particular, will they impact things such as trade products like letters of credits and international trade? Are we going to see a disruption on that level from CBDCs which are developed?
Yes or no. So I think it's really interesting. Absolutely. I think when you mentioned letters of credit, trade finance, I mean, I'm still shocked how trade finance operates. I'm still shocked of how a lot of these letters of credit, the idea of a letter of credit has not changed for 120, 130 years. I remember when I was a young lawyer, one of my thesis was on letter of credits, actually. And I was at the time surprised that hasn't changed. And I guarantee it has not changed the last 20 years. It's absolutely unacceptable, frankly, that there's so much friction in the system. Can crypto change that? Absolutely. Can blockchain change that? Absolutely. Now, the question becomes, can CBDCs play a role? Actually, why not? Right? If you can use actually CBDCs in the process to actually settle this transaction and make it faster, why not? The big issue there, though, is actually we need the ecosystem players in that trade finance ecosystem to be willing to change. I'm always amazed, and I've been very critical of many of the banks in the space who operate very old school. I'm amazed that people are using faxes. The faxes in this trade finance business, the fact that people are doing wet signatures that to physically sign. Frankly, that's an insult to 2021 that people still have to sign physically. If your security tool to prove that somebody has actually done something is a physical signature of the ink, I mean, man, you need a basic 101 of technology. There's a million better ways of doing that than what we're doing right now. So I think it's very sad because, again, it creates the cost of the system, and the people who are paying the cost of this is all of us, is consumers, because this is the cost that can be taken out of the system very, very easily. And not only, by the way, into trade finance, but also in the shipping industry and other processes within that supply chain, which can have a big advantages.
And I guess that, I mean, final question, because I appreciate we're short on time. It brings a point around customer adoption, doesn't it? That only these technologies which we're talking about can be driven as fast as customer adoption is willing to accept and using new technologies and able to adapt to new technologies. So do you see that as some, because we do hear about all these exciting things which are happening, but if customers don't really understand it or use it, does that create some roadblocks which need to be sort of looked at and experimented with?
A great question, 100%. So I think the biggest problem we see in cryptocurrencies is obviously a lack of familiarity, a lack of kind of education of knowledge on it, right? It's like anything else in life, anything you don't understand, you're afraid of it. And this is why actually when we see people start experimenting with digital currencies, they're like, wow, I can actually send money from here to there very easily. It operates 24/7. There's a lot of benefits. Wow, people discover the benefits of it. The biggest, I think, problem I see to adoption right now is twofold. One of them is a lot of platforms are still not very user friendly. It's good if you're a 20-year-old and you're very tech savvy and you understand how these things work. It's not a problem. But if you want to make now today around the world, there's about 300 million give and take people who use cryptocurrencies. I mean, whether it's a lot or it's a little, we don't know. But if you want to go to a billion, for example, in the next 2-3 years, you need to make it more user friendly. So everybody should be able to use it without being afraid. And I use always the example of my mom. If I want my mom to use cryptocurrencies, we really need to make it more simpler for her to be easy using it and you'd be comfortable with it. A second thing I think was very important is actually really broader education. As you mentioned, Sagar, I've been teaching crypto now since 2015. I mentioned I teach the first Fintech university course in the world in Hong Kong, right? I'm physically out right now. And I really believe that we have a duty to teach the young next generation. We have a duty to teach the young people about this. And right now, I think what I recommend to everybody is one takeaway from this session is this weekend, or spend 20 minutes, half an hour, read about this, watch some YouTube videos. Even not to do self-promotion on my channel, I have a lot of content on it. I'm about to launch by doing 2 weeks a MOOC, online course on crypto as well. So there's a lot of stuff, ways to learn. It's never been easier to learn about crypto than it is now. When I got into the industry in 2013, we really had to go read technical papers. It was very, very techy. It was very complicated. Now it's very easy. There's great videos are made online, easy in many languages. So spend the time to learn about it. If whatever country you're in, it's allowed to buy a small portion, get the experiment with it, see how it goes. I tell many people around the world, for holidays, birthdays, Christmas, whatever anniversary you're seeing around the way coming, why don't you give us some cryptocurrencies as well? That's what I've been giving as a gift for weddings and other things. I think it's a good way for people to learn about it. But if you just spend some time learning and experiment with it, you will see that it's actually less scary than many people think. So when it comes to adoption, education and understanding is the most important element. And that's why I'm very passionate about educating and training the next generation of talent, because I think it's very important.
On that note, unfortunately, we've run out of time. Henry, thank you once again for an awesome session. This has been eye-opening. There's been a huge amount of information, and we look forward to future collaboration with you. We want to get you over to Saudi at some point as well and meet some of the community here. We're really following you and learning about a lot of the things from you as well. So look, really appreciate your time and your support for Fintech Saudi on all the initiatives that we've been working on. Thank you everyone who's joined. We've got a huge audience for a lunchtime session. Thank you for joining us during your lunchtime, really important meal, of course. We do have other Fintech Tour sessions happening as well. So do please go to www.fintech-tour.com to see all the other great sessions which we have. We have some introductory sessions about blockchain in Arabic from some speakers. We have some sessions about digital banking. We've got some sessions about insurtech. So definitely worth going to. Douglas, one of Henry's colleagues, will be talking about SupTech and RegTech next week. So we do have some really good sessions for you to join. So on that note, Henry, thank you once again. Thank you all for joining, and we look forward to seeing you in the future.
Thank you very much. Look forward to being back in the kingdom, and thank you very much, everybody. Look forward to keeping in touch via social media, and hopefully seeing you all soon in Riyadh in the kingdom when I'm back. So thank you very much, everybody. It was a pleasure sharing with you all.
Take care. Thank you.